morning, folks. Joe Baker. Going to go over today's market action with you. For those of you that traded it, I hope you did well. I did do some early trading early on down to the target level that I put out last night, and that was pretty much it for me. I know we did catch later on in the room. We did catch a pretty good move. I guess 2 moves to the upside for some pretty big points, but at any rate, it was still a Pepto-Bismol day, let's just call it. This Gasparino and Faber coming out every 4 minutes. AIG's got the loan. No, they don't. Yes, they do. No, the Fed's in. No, they're not. It's private. No, it's out. It's in. It's out. I mean, it was getting a little bit ridiculous. It's almost like you want to just walk away from it all and just get away from everything. So at any rate, I had mentioned last night that the VIX, again, you can do this. For those of you who have TradeStation, I don't know if you can do any overlays or double charting, like they allow you to do this in different subgraphs. But what I'm going to do is I'm going to crush this chart down. I'm going to try not to crush it too much, but just enough so you can see. I did this in last night's video as well. You might want to just go back and just look at that one. Every time the VIX spikes, you have to understand what that's signaling. That's signaling everybody is buying protection kind of at the same time. And again, you all know you never follow the herd. Okay, it's one thing to follow the crowd, but you don't follow the herd, and that's what this signals. And usually that's at a height of fear, and that's kind of temporary capitulation. So you can see where the VIX spiked up here around the 32 to 34 area, and the market proceeded, for about, probably about a month or two up, and then obviously came down and did, test this low area, came back up again, obviously couldn't take it out, rolled down, took out that low. Here's where we did the double test. We had another spike in the VIX, another spike in the VIX here. Came back up, came back down, came back up, couldn't take out the swing high, came back down again, another spike, up again, and so forth. You can see the chart. Here's the last time it spiked was midsummer, and the market had come up, and this is what is our rollover. And here we are again. We spiked up to about 34 on the VIX. Now let me just open this back up again and tell you what I'm seeing. Okay, I did mentioned last night that this is an ABC structure down. I still believe we are going to get to the 1072, and I said based on my fork, it could be weeks away. It could be 3 to 4, 4 to 6. It's going to get there at some point. What's going to be the impetus to do that? I have no idea. It could be Wachovia, it could be WAMU. There's not many large banks left, but it just could be the unraveling of Lehman's portfolios. They're going to have some forced selling, I'm sure. So a lot of things are going to be hitting this market, and we get back up to this trading range, above 12,000. I want you to look at the areas of 1235, 1245, and 1258. These are the areas I posted up here. These are some big areas, and look for these areas. Look for the 35 to 45 to be kind of a real choppy area, and then possibly up to the 58 area. And I think that we're going to continue downward from there, but I think we're going to just make lower trading ranges and ultimately work our way down to that 1280 area. I mean that 1080 area for this whole Fibonacci cycle to play out. And I think that might be hopefully a short-term large bottom for us. But at any rate, again, watch these VIX. If you guys don't know what that is, it's a volatility index. When it spikes, that shows excessive fear, and that's usually signals a temporary market bottom like it had the 5 times prior. So you have no reason to believe it wasn't this time as well. And let's go to the levels for tomorrow. Okay, line in the sand, 1220, breakout, 1225 and a quarter, 1229.50, 1233.75, 1240 and a quarter, and an extension of 1246.50 due to the excessive volatility we have. Did I mention we have some volatility? 1220, 1216 and a quarter. Oh, look at that. Breakdown is 1210.50, 1204.75, 1250, 1194.50 would be the target, and again the little extension down there at 1190.50 due to again the wide range of volatility. Again, as the rumors in the news is running through, guys, please use your stops. I said this again last night, that these markets are absolutely wild, and I mean wild. So trade carefully. If you don't have to trade it, now would be a time to, do some other things, get some things around the house done, or some other things you needed to get done but haven't, and come back in a week from now, and it'll be easier trading. We have to trade every day. We run a room, so we're in it, but you don't have to. So that being said, I will bid you all adieu, and I will speak with you tomorrow evening. Take care and trade careful.